Trading, David. All share index up 2.5%. Wow, you guys are getting rich.
It is. It's we almost back where we were early June when the all
So you guys, it means the people who've got a lot of money invested in the market.
In the market, yeah.
The gazillions that the Shapiro family, Shapiro's family trust, heavily invested in resources, which were up 3.5%.
Yeah. We've got a big trust. Please find a wife for my son.
No, David, you've been away for enough Thursday night wedding. The financial 15 up 2.5%, top 40 up 3%. It really has been a strong day. What is causing this?
Alec, there's improved sentiment. It's got nothing to do with the local market. It's all happening offshore. Yesterday we had Goldman Sachs. Today we had Intel, the giant chip maker, who believes that we're going to see improved sales in the second half. We've also got China. Reports coming out of China of increased material demand, in other words, commodity demand. Inflation figures in the United States weren't good. That pushed up gold and platinum. So all of this is translating into demand for mainly commodity stocks, and I think that's flowing through to the rest of the market.
Gold had a good day.
Very good
day. It was hovering just above $900 an ounce. Now it's looking close to $950 again.
Well, that's on inflation worries. The CPI, the consumer price index in the United States, was up more than expected. Yesterday, the producer price inflation index was up more than expected. So concerns about that. A lot has to do with the oil price there. But it's triggered a demand. I'm a little concerned, I must say. You know, I'm very bullish about the market and have been, but one gets a feeling that it's just running ahead of results. In other words, I don't think results will be able to justify some of the prices that we're seeing. So I stick to resources. I'm a bit concerned about the financials and industrials.
We had news today from China that the iron ore price is going to be slashed, yet Kumba's share price went up 10%.
Okay. What the market was expecting a bigger slash than a 33.33%. So the market was building more than a third down. And that's why the market responded the way that it did. So that was considered a very good deal on iron ore prices.
Well, just shows you never can tell with these things. Old Mutual share price up another 7% today. What's going on?
I don't know. I think analysts have turned bullish, and it may be that the company is going to resume paying dividends. We'll hear on August the 5th. I think the results come out there. We'll get a much better idea of how they're performing in this market. You've got concerns, and I know your concerns are.
Well, we've got just the man here to tell us more about corporate bonds a little later, because Old Mutual is not an insurance company anymore.
No,
it's a U.S. corporate bond position.
It's a financial services company, sure, with a big exposure to U.S. bonds.
It owns U.S. corporate bonds. I mean, forget what it's got in financial services. That's just the buy. But Conrad Rees will tell us more about how, presumably, U.S. corporate bonds are looking healthier. That's why why Old Mutual's going up.
If that is the reason, then I think people are starting to feel more confident about their capital position and pushing the share price up. There's a huge gap to embedded value, which, embedded value really their
which is the underlying value. Yeah. I think gold shares nice. 4% Anglo Gold, 4%. I think Steinhoff's up to 14 Rand.
Consumer
30,
shares, all the consumer shares. Bidvest has been a performer. The one thing that I must point out is that the shares that led this rally up, Naspers, Tongaat, Aspen and that, which were early leaders, came back today. A bit of profit taking come back. So I think we should see some form of profit taking in the next few days.
We have got a podcast on the Moneyweb website now from Duncan Artis of Alan Gray. Fascinating discussion with him. He's not quite as confident as everybody else is. He says that he thinks the market might have just overreached itself in the short term.